So if you guys want some 100% honesty right now, I can't believe what's happening. On one hand, the markets could fall 20-30% down to new lows if this situation in Israel does escalate. I hope it's a very low chance that that happens, but there is a chance of that. At the same time, there's a chance Tesla stock could go through a massive short squeeze. You really can't make this up. The SEC is now imposing new requirements for short positions. We don't have anything like this on our markets today. Bill Gates and that short position on Tesla could soon be exposed. This is not an ideal situation for shorts in Tesla, which, fun fact, all of the short positions in the market are over $900 billion. Tesla, in which is about 2.5% of the entire short position of all 15,000 or so stocks that are on our markets, that are listed on other exchanges. So, yeah, there's a chance that the markets collapse. There's also a chance, which I think is higher than the latter, that Tesla goes through a short squeeze, that Tesla's value could finally be realized over the next 2-ish weeks or so. So I want to give you guys that side of this situation. What could happen to the upside? What could cause it? What do I think is going to happen? If you are an investor in Tesla stock, if you own a single share of Tesla, or maybe you want a better opportunity to buy the dip, well, there's maybe a little bit for everyone here in this video. Hit the like button if that fits your situation, as well as subscribe to the channel if you guys want to stay up to date with everything going on with Tesla and the broader markets each and every single day. So believe it or not, I do tend to be an optimist, so I do think there's a greater chance that this situation is going to come and pass, this Israel conflict, markets will get on their way, and we will not see another World War III event. Ray Dalio, on the other hand, came out on Friday and said there's a 50% chance that this Israeli war could turn into a world war, even between the US and China. I would say that probability is 5% or less. There's probably a 45% chance this could turn into a regional war, though, and that could affect oil, and that could have a dramatic effect on the economy. If Iran wanted to stop 30% of the flow of oil in the world, they could do that. So I think there is a chance that markets could get worse from here, and maybe a lot worse from here, but I wouldn't be doom and gloom to say the world's about to end like Ray Dalio and some other individuals. Let's be honest. Nobody wins World War III. I'm an optimist. I'm a realist. I think there's a greater chance than not the markets get over this situation, and again, it becomes business as usual, and Tesla in particular can go through a massive rally from here for reasons we will talk about later on into this video. But I refuse to be scared or too timid to tell you guys, there's a chance that the markets could hit new all-time lows based off this situation, or at least lows that we haven't seen for many years. You could go back to 2019, 2018 levels on the S&P, on the NASDAQ. If this were to happen, you're talking a pullback of 35, 45%. Sure, that's a possibility, but is that likely? I would say not as likely as some people are arguing, especially a Ray Dalio. Again, the markets can handle bad news. They cannot handle uncertainty. If the uncertainty continues to grow, this does turn into a regional war, and then it does turn into a regional war, and then the flow of oil gets restricted. That's where you get your worst possible outcome. But if Israel does what Israel has to do, then nobody else gets involved, the markets will very quickly get over this. That is what I am willing to bet actually happens. Because if you're someone that thinks a short squeeze or just any kind of move higher is coming for Tesla, you have to be in that camp. Tesla is not going to go into the 300s. At the same time, there is a major regional war going on that is essentially restricting energy prices, really restricting energy, which will have an upside pressure on energy cost, on your gasoline cost at the pumps, you could also make the argument that theoretically, if the worst possible scenario was realized on the West Coast, somewhere like California, maybe they could see $25, $30 gallons of gas. Maybe as the country as a whole, you could see $12 to $15 per gallon of gas. That's if 30% of the world's oil supply was cut off. Maybe higher than that. Who knows? I'm just speculating here. But you could also make the argument that could be positive for Tesla because Tesla is EV and your cost to own a Tesla would be dramatically lower than your cost to even fill up your ICE vehicle. So there's even a potential positive from that as well. But by and large, if the markets were to collapse, don't expect Tesla to do well. But again, that's not what I'm expecting. I don't think that is the most likely outcome. But the likelihood of that is too high for me to ignore it. So that's a little bit of a disclaimer before we get into some of the more bullish things for Tesla. Just remember, if the markets collapse, Tesla's not going to do well, at least initially. The higher gasoline prices were to theoretically stay, the better that could be for Tesla. But there's a lot of possible outcomes here. Overall, I'm not in the camp of the worst case scenario is going to happen. But I will always bring you information that could happen, whether it's good or bad, whether people like it or not. Let's now get into this developing situation with the SEC and short position disclosures. If you guys are unfamiliar, if you look at 13F filings on a Tesla, for an example, or for any other stock, you will see calls, you will see puts, and you will see the share amount owned by different institutions. It's pretty rare to see an institution actually report a short position. They can, but they don't have to. Here's this one from the Knights of Columbus long/short equity fund investor shares. They're short on Tesla about 2,600 shares. But you won't find many of them that actually disclose their short positions because legally they don't have to. But this article says new US SEC rules to shine a light on short selling. First proposed in late 2021 and early 2022, the rules will require investors to report their short positions to the agency and companies that lend out shares to report the activity to the Financial Industry Regulatory Authority, FINRA, a self-regulatory body that polices brokers. The SEC official said the new rules, which the commission agreed upon in a 3-2 vote, support the agency efforts to police the practice. In a separate 3-2 vote, the SEC also adopted a rule requiring institutional investors and other companies involved in lending stock as well as broker-dealers who borrow stock to report information about the loans, such as the name and the volume of the stock, collateral, loan dates, and termination dates to FINRA. FINRA will then publish most of this data on an aggregate anonymized basis the following day. In a concession to industry, the final rule would see FINRA delay release of loan amounts by 20 business days. The rules will be effective 60 days after being published in the federal government's register. This means that almost on a day-by-day basis, you will see who is taking out short positions, what size those short positions are, and then about 20 days later, you will get more information. How the loan is structured, what the date of this loan is set for, if there is a date. A lot of the times there's not in short positions. You'll also see the collateral, how they were funded, a lot of deeper information. Now, why is this important? Potentially for Tesla and a short squeeze. Well, according to data analytics firm S3 Partners, short interest in the US market totaled $927 billion as of Thursday. Tesla's short interest, or dollar amount that is currently sold short, is almost $22 billion. So that means if you divide 22, just to keep it simple without adding all the zeros, by 927, Tesla accounts for about 2.4% of the entire stock market's short interest. Tesla is by far the most shorted individual stock on our markets. It's a highly controversial stock, whether it's Elon Musk or whether it is people on different political parties that don't want to see fossil fuels exist anymore or don't want to see EVs exist anymore. There's a lot of reasons why people short a Tesla. Maybe they just think it's overvalued and that it's not going anywhere. And obviously that has been a losing bet for a long time. But other individuals, like Bill Gates, for an example, well, a lot of people have speculated he's had a short position on Tesla for a long time. We could never know that. That's never reported to us. We don't know who has short positions on Tesla. We just know how many dollars are sold short in Tesla. We know who's long in Tesla, but not who is short. That information, a lot of individuals probably don't want to get let out there. I doubt Bill Gates would want you to know he has $1 billion short position on Tesla, for an example. Other firms as well would not want that information to be put out there, to be in a vulnerable position when it comes to Tesla. So I do think this potentially creates more of an upside pressure to actually seeing shorts covering on short positions. But that's not the biggest reason why I think a short squeeze could come following Tesla's earnings. With Tesla's earnings themselves, a couple interesting things that are going on. Nobody cares about the numbers. As long as the auto gross margins, the big story everyone has talked about over the past year or so with Tesla, as long as they don't continue to fall too much, as long as they are staying pretty stable or even rising, investors will look past that. Investors are going to look past top line revenue, free cash flow. Investors are likely to look past EPS numbers. At least they did last earnings. Last earnings, it was all about the forward-looking guidance. And that's going to be important this time around, specifically with the Cybertruck. A lot of Wall Street doesn't pay attention to Tesla the way you and I do. So the information that we have, well, we could have a logical argument with a lot of people on Wall Street, a lot of your investors in Tesla or shorts in Tesla. And they probably, I would go out on a limb, some of them or most of them don't even realize the Cybertruck could be announced on earnings or potentially even over this weekend. Tomorrow, we do see a lot of announcements on Sunday. We'll have to wait and see. I think at the bare minimum, you're going to get the Cybertruck delivery event and subsequent delivery date by the earnings call. The Cybertruck has not been awarded too much value from analysts or from investors with Tesla on a big money basis. We obviously value the Cybertruck. We're more connected to what's going on with Tesla each and every single day. But in the valuation models that a lot of hedge funds, institutions, big money uses, they don't value the Cybertruck in that. And I think there's real upside surprises here. I think Tesla's going to launch the Cybertruck and they're going to launch it in a big way. I think Tesla could be producing thousands of these per week. Even 1,000 Cybertrucks being produced every week is 52,000 vehicles a year. What if there's 5,000 Cybertrucks being produced a week? Well, that's 8,000 Cybertrucks a year, 52 weeks a year, times 5,000 vehicles a week? That's a possibility. Wall Street is not expecting to hear anything close to that. Wall Street's not even, I would argue, expecting to get a Cybertruck delivery event on earnings. So I do think there's a real upside surprise when it comes to the Cybertruck announcement. Now, what's actually different about the Cybertruck compared to any other vehicle Tesla has launched is a truck is a much different product than a car. Whether it's the Model S, the Model X, the Model 3, the Model Y, they're all similar to the same extent. They're passenger vehicles. They're not for really off-roading. They're not for any kind of construction or project. They're passenger vehicles. Sure, the Model X might have a little bit more room, might have 2 small seats in the back that you're not going to get in, other models of the Tesla. But it's not a new category like the Cybertruck is going to be. Also, need I remind you, there's about 2 million pre-orders for the Cybertruck. And as Elon said on the last earnings call, the demand is so far off the hook you can't even see the hook. These are basically vehicles that are already sold. So if we get a good number as far as estimates for deliveries next year, that could be a big upside surprise for Tesla stock. And as Morgan Stanley said, that is what is going to move Tesla stock up or down. And I imagine if we do get the Cybertruck and we do get some kind of estimates for production estimates or delivery estimates for 2024, which is certainly a very real possibility, you're not expecting a good number there. At least Wall Street is not. And that is what is going to move Tesla stock. The biggest risk I see to Tesla stock, minus the Israeli war, the potential escalation of that, is if there's no delivery announcement or delivery event announcement on earnings. And I think that is pretty dang unlikely. As we looked at in the last video, even on Friday when Tesla stock was down 3%, you still had a positive order value of 78%, meaning if you had $100 going into Tesla options on Friday, $78 of which went into buying calls or selling puts, bullish positioned, right? Trades. $22 of which went into buying puts or selling calls. That is really good, considering Tesla down 3%, but 78% positive order value is good for any given day. And the option activity was elevated on Friday. You had 653 orders totaling $814 million. And even over the past week, you have seen about $4.7 billion go into Tesla options with a positive order value of 53%. Now, you're in Q4. Nobody cares about 2023 anymore. Fiscal year 2024 started on October 1st. That's why this earnings season, the numbers that you get for companies are going to matter very little, as long as they're not big to the upside or big to the downside based on a relative expectation. It's all about 2024 at this point. It's all about positioning now for 2024. And Wall Street doesn't exactly have the highest expectations for Tesla next year. About 27% delivery growth, 29% EPS growth. I think there is room to beat that. I think you're a little bit production constrained. I think we want to see progress on Giga Mexico, get more kind of understanding of the upgrades that we're seeing at Giga Berlin and Giga Texas, Giga Shanghai, see what that can do to production. I think that will be important as well. And that will be information that we'll likely get on this earnings call. But again, to the point that I have made in many other videos, for right now, it doesn't look like the economy is going to have a super strong 2024, even if we avoid a recession. So usually during low growth environments for the markets, growth stocks, high quality growth stocks, can do very well because investors, they just want growth. That's it. It's the bottom line to it. If interest rates do start to come down in 2024, and it looks more and more likely like that's going to happen, then you can assign a greater valuation to growth stocks in particular. Well, Tesla, just think about this as a crazy concept for everyone out there. Tesla has done what it's done with 5.5% interest rates, with a Fed that has continued to raise rates. Imagine when Tesla, or what Tesla does as far as the share price, once rates do start to come down, it could be huge. Investors are positioning for that now because that's the reality in 2024. I think it's also important to point out, according to Jefferies, Tesla and Apple are the most under-owned companies right now in the land of big tech. Specifically for Tesla, about 30% of hedge funds and institutions have any exposure at all to Tesla. Most of them just steer clear altogether. As the outlook for Tesla gets better, more people are going to pile in. Hedge funds and institutions, they tend to follow the money, follow whatever is hot at the time. Last year it was dividend stocks, consumer staples. This year it is big tech, but it's not high growth big tech. It's not a consumer cyclical growth stock like a Tesla that is very dependent on the economy doing well. They want to own a Microsoft. They want to own a Nvidia that has tailwinds at their back. Well, let me tell you right now, Tesla's probably going to have a much better 2024 than a lot of people expect, as long as we don't go into a deep recession. Even a mild recession, I think Tesla is already priced for that. And I don't think that's going to come to the markets as a big shocker. If the markets themselves go higher, this could push Tesla even higher than what I expect. Now, we're going to get into exactly what I expect could happen following earnings the next couple of months heading into 2024. But if you look at the NASDAQ, this is something that I talked about in the last video. You have a perfect cup and handle formation. To confirm this, you'd really want to see a break of above about 370. If you were to break above there, you could find yourself on the QQQ in the 415 to 420 range. Just confirming the cup and handle, breaking out from there. It could go even higher than that. For that to happen, you would need to see this Israel war not escalate into a regional war. You would need to see the economy actually see a soft landing. If you believe those things are going to happen, well, you probably want to be super long in this market. Again, odds are stocks do come down a little bit. Question is, does this situation escalate? Does the economy hold up? Or does everything turn bad? And then in that case, like I said, you could fall to new lows. At least maybe the pre-pandemic high. That would be about 232 on the NASDAQ or on the QQQ. That would be, what, about 4% lower, give or take? No, that would be 11% lower than the bottom in October. So that would be some very big downside from here. That would be downside of roughly like 37% to get back to your pre-pandemic highs. That's a possibility if, the dookie hits the fan and the fan starts to spin. Now, odds are, this is playing a probability basis. Odds are Tesla comes out. Tesla gives us really good earnings, at least better than expectations. Even if they aren't really good, they're probably going to beat the Wall Street estimates. Tesla usually does. And Tesla's probably going to give us some upside surprises in regards to the Cybertruck and maybe some of their production numbers. Again, remember, Cybertruck is already sold. 2 million pre-orders. Even if half of them follow through, you're looking at 1 million or so odd vehicles that are just waiting to be delivered. And that revenue is waiting to be collected. So I think that is a very big deal the markets will have to pay attention to on a technical basis. Again, I point this out all the time, but Tesla is really finding a lot of resistance around this downtrending line of resistance, which is basically connecting the peak of 414.50 down to the prior peaks that we have seen since, creating a straight line, and that's sitting right at about 265. On the downside, you have the same thing happening on a shorter term basis, connecting from January 2023 when Tesla hit $100 per share up to where we are right now following the lows. You're hitting higher highs, higher lows. This is textbook, exactly what you would want to see with Tesla. And technically, you could even say Tesla has a cup and handle formation. It's not as clean. Obviously, it's a lot more jagged than what you're seeing on the NASDAQ. But to some degree, since August of 2022, you have seen this cup. Now you could argue you're in the handle formation. You break out from there easily. In my opinion, Tesla stock is likely to make its way back to August 2022 levels around 315. I think you overshoot that to the upside. I think you go as high as 350 as long as everything doesn't collapse out there, right? That's the caveat to all of this. If we get the Cybertruck, Tesla's great, everything's fine, we should rally. If all hell breaks loose, the dookie hits the fan and it starts to spin, well, everyone's going to get a little bit dirty, and that would obviously be Tesla as well. The stock would fall, at least initially, during that situation. But that's what I'm expecting. I am expecting a move well into the 300s. Now, if these short requirements, these new rules that expose these short positions, if that does have that bullish effect on maybe some shorts opting to close those short positions, that could have an even bigger effect. Wouldn't surprise me to see new all-time highs in Tesla at some point in 2024 in the first half of the year, maybe the first couple of months of the year. But that all obviously depends, is very contingent on what happens to the broader markets. If all hell were to break loose, everything were to get bad, I could see 150 again on Tesla. That's if, the NASDAQ really did plummet. I doubt you ever go lower than 101. The previous lows that you've seen back in January, these were very artificial. And after everything that we've been through, the economy, the Fed, all of that, raising rates, inflation, Tesla is still down from its 52-week high. Well, technically it's not a 52-week high anymore, but it's still down from the levels we've seen in 2022. Right at about now, you're holding the same price as you were during May, June, and July of 2022. So I think this is more of a normal range. Anything under that, when you hit 100, none of that was normal, nor I believe it was justified. So I do think your downside is a lot less likely than your upside move. And I do think if you get that upside move, it can be much larger than a potential downside move. So your risk reward looks really, really good on Tesla. But again, for like the 10th time, if the market's, if Dookie hits a fan and starts to spin, you're going to have a problem on your hands. Tesla or any other stock. That is going to conclude this video. Hit the like button as well as subscribe to the channel if you guys made it to the end, and if you guys want to stay up to date with future videos. As well as that, if you guys would like to come trade with us live in real time, I send out all of the trades that I make every single time I make them. Come hedge out your portfolios, come make some long trades, some swing trades, some spreads, some YOLOs. We're doing a little bit of everything, buying stock for the long term. Link down below in the description of this video. You guys enjoy the rest of your day and your weekends, and I will see you in the next one.